Well, we talked about it before we opened here this morning that we had a lower, in fact, sometimes a sharply lower trade in that Globex market overnight. And let's go ahead and dive in here and see if there's any follow through this morning or not. Lots of the outside markets are really seeing a lot of pressure today on the expansion of the coronavirus situation, not only in China, but in about 10 different countries around the globe now, including in the U.S. Well, look at the corn. They're starting out with a March contract down 9 1/4 this morning. We're trading at 378, almost on the low of the day, and there it is on the low of the day, 377 3/4, down 9.5 cents as we speak. So a lot of pressure there. The May contract down 8.5. We're at 384 1/4. And on the December new crop contract for the corn, we're trading at 392.5. Also on the low of the opening range, we're down 5 3/4 cents on the day. Remember last week how we were hovering above $4 or just touching it from time to time? Well, boy, they took that out in a big way this morning. Let's take a look. Oh, by the way, on the corn, we had an overnight export sale. And I know John Jenkinson and I were talking before the open here. Yeah, remember the curse of 2019 where every time we got an overnight export sale, the market would sell off? Yeah, we had corn sold overnight to Japan, and it was 111,000 tons. And again, we opened lower. Now, it may be unrelated today, but a lot of pressure in this corn market anyway. I just wanted to point that out, that we did have an overnight export sale. How are we opening in the soybeans? Well, it's not necessarily a red letter day. We have the March contract down 12 1/4. We're at 889 3/4 right now, and you have the May down 12. If you look at our wheat market, we go to Chicago first, and we have March down 12.5 at 561. Just incredible pressure here in the entire grain complex. Kansas City wheat is also lower, not that much. We're down 8.5 at 477.5. Minneapolis wheat also down, and it's more in the neighborhood of 6 cents lower at 541 1/4, down 6 1/4. Brian Hoops joins us right now. He's with Midwest Market Solutions in Springfield, Missouri. Hey, Brian, thanks for joining us here. Boy, a very negative start to a full trading week here, but it seems like it's driven by outside influence.
Oh, yeah, you're absolutely right. Most of this is coming from fears about the virus and it's spreading. In fact, it has moved into the United States. We have 5 cases here, but none have been fatal. All have been contained. But that is certainly what is driving markets in here. You know, markets always trade fear before fact, and the fear is, from a consumer standpoint, that this will lead to less demand for U.S. products, corn, soybeans, meal, anything that would be consumed, wheat as well. And so that's why we're seeing so much selling pressure in here. So it's a lot of these large fund type managers, large fund traders selling this market off, and kind of ignoring the larger term fundamentals.
Well, I think the trade seems to be really alarmed by the fact of the extreme measures being taken by the Chinese government, where they're basically putting under quarantine entire large cities. And this at a time when hundreds of millions of people are supposedly traveling around the country to celebrate the New Year. And it seems like a very extreme measure, let alone the fact that traders are realizing that start of this virus was the very same city where the SARS virus started back in the early 2000s. So they remember how that came and really put a dent in the markets too.
Yeah, and they have to be very aggressive because of the severity of this virus and how easily it's spread and can be contracted. So they have to do something extreme. They have to get it under control as quickly as possible. And that's why we saw, crude oil sell up so hard this month because of fears about this. They pretty much quarantined the entire city. People are not moving around, and the fear is that'll turn and translate into less demand for products such as crude oil, such as meat and pork and grains as well. So yeah, we're certainly seeing the effects of it here in our U.S. ag markets.
Well, you're right. In the overnight trade, the crude oil market was down over $1. I see where it's roughly about $1 now to the downside. And then the Dow Jones Industrial Average, just checked, it's down about 410 points. So just extreme weight in the entire market overall complex. It doesn't matter if you're talking just ag commodities, but also equities and financial markets too. We'll come back here in a moment, Brian, and we'll analyze how we're opening up in our livestock trade. We'll see if they're immune from all this or not when we come back. All right, we're talking with Brian Hoops of Midwest Market Solutions. We talked about the crude oil. Let's see if it is lower. As I mentioned, overnight it was over $1 lower. Well, it's kind of stabilizing, if you can put it that way, a little bit. It's still down 88 cents at 53.31, but really kind of taking it in the teeth here. Okay, let's go to the livestock trade. We're talking with Brian Hoops, and on the live cattle market right now, we have February down $1.25, April down $1.88 at 122.42. On the feeder cattle market, so far this morning, we have the March contract. We'll go with that. It's down $1.68 at 138. Even April down $1.78 now. And look at the hogs on the lean hog market this morning. Wow, we have February down 122, April down $1.95, and May down 227 this morning. Now, Brian, we had the cattle on feed report that came out Friday afternoon, but it was exactly as what the traders had anticipated. So what are we trading on now this morning? Is this more coronavirus talk?
Yeah, exactly what that is. You know, we're seeing that weakness in the grains. It's in the livestock market as well. But, you know, the big fear is people won't be able to move about like they want to. We won't see people moving and going out to eat, so demand will start to fall. And, you know, the big fear all along has been we've got a lot of product available. We have 3% more pork supply, bigger turkeys, bigger chicken numbers. We have more cattle now. In fact, this report told us we have the largest amount in the last 12 years. So we have all this supply that we either have to export it to other countries, and if they have concerns about the virus, they may not want as much product as what we're able to give to them. And domestically, there's a fear that people won't be, you know, going out to eat as much or traveling as much, and that is, I think, what's weighing on the markets here today. It's not so much just the big numbers that we saw on Friday, because those, I think, probably were somewhat factored in, but with the other markets declining, stock market down sharply, crude oil down sharply, all these grains falling, it's really spilled over into the livestock sector as well.
Well, Brian, thanks for the time and for the analysis this morning. I appreciate that. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. So a real ouchy day to start out this morning.
Starting
Lots of
off
pain.
on a rough foot, that's for sure.
Yeah, just about everywhere you look.
Thank you, Marlon.